So when they call me and they say, hey, I am not moving for 12 months. I'm Nikki Rogers with Team Nikki Rogers, and today I'm here with Nelda, the team leader at Keller Williams New Bern. Typically, that excites me because I have the ability to soft pull credit for all three bureaus. So I encourage them to still submit the application, and then I can soft pull the credit, which means that it will not impact their credit score on their credit report. And then I get to see how we can make it better. Additionally, if there's anything that's a little bit unique or different, I can go ahead and get in front of that. I'll give you an example. I had a client this week who said they're moving in the summer and they weren't quite sure if they wanted to fill out the application. I'm really glad they did, because when I pulled the credit, there were some tweaks so we could get the score up. But more than that, I noticed that she received child support. And child support is a form of income that we can use to qualify if it will continue for the next 3 years. Her child is going to be turning an age before the summer that makes it to where we can't use that income. So that's going to greatly impact their approval. So if she had gone online and put in that income and added the child support, it would spit out a letter saying, you're approved for this. Not a rate, because she doesn't have a house yet, but just, you're approved, go look. If she purchased her home after that birth date, which is in May, and she's going to be here in June, we would not be able to use that income, and therefore she would not qualify for the same amount of house that she's being told she does today. So in this scenario, it's very important that we explain these things so that they understand that we can adjust the timeline based on when they're coming, but also based on their full financial picture. A VA loan requires that you occupy the property in 60 days. So this would be a client that if you're coming in June and we know what your income is going to be, we could go ahead and find her dream home today and close in April, not have her first payment until June, and everything is seamless. But if she had just gone online and waited and then showed up in May and then talked to me, or even waited till she was under contract and talked to the online person, she wouldn't qualify anymore.
So, Nikki, I think what you're saying is really important from a real estate perspective, from a realtor perspective, because inventory is such that when you decide to move, what you want isn't always available.
Yeah.
So sometimes it's the financial picture that's driving them, but sometimes it's what's going to be the right house fit. And so when the lender and the agent can get together and work on that collectively, it's possible that the right thing comes to market for a buyer far before they are ready, or we start the matchmaking process of driving and creating inventory that doesn't exist today. It's kind of getting our eyeballs on really being able to look for that. And when somebody's in a situation where they have to move, we don't get that same opportunity.
Right.
So it's much better to have time to position and go look for that listing and go look for that property and be in communication with all of our other agents to make that happen.
So it just clicked in my head, our clients that are retiring. It is so imperative that we're ahead of that, because the income that they're making when they're on the job is going to be very different when they go into retirement. And so having that conversation, I say, if you know you're going to retire within the next 2 years, we need to be having that conversation right now, because we need to be prepared to set you up financially to purchase the house. It's not that the client can't afford it. It's just understanding retirement income and how it's received and what that does for your qualification purposes. Whether you're coming here because of the military, or you're coming here because of retirement, or a new job, just like we heard Bosch has opened up all these jobs and we're excited about them coming. It's the same concept. If things are different here than they are in the state they're coming from.
So talk to me about Eastern North Carolina is a place where a lot of people are self-employed. We don't have, you mentioned Bosch, and we're thankful that Bosch is here amongst a couple of other industrial and the base. Those drive good W-2 employment. But a lot of people choose to be self-employed in Eastern North Carolina. What does that look like for an agent working with someone who's self-employed?
Yes, so that, again, same thing. You have to be in front of it. Specifically because the income we can use is what they pay taxes on. It's really that simple. What you claim at the IRS is what I can use. Now, there's a couple things that we can add back, and I don't want to get in the weeds of tax returns, but it is as simple as what your gross, meaning everything that you bring in, that's not your income as far as the lender and the IRS are concerned. And that's what most 99.9% of business owners believe. I sold $200,000 worth of a product, that's my income. No, your income is less all the things you had to shell out, the expenses to get to that. So it's a net number. And you know, the job of the way the tax codes are written are in benefit of small business owners. It is in your best interest to write off your expenses. They are true expenses. However, when you're going to buy a house, it's one of those, gosh, what a catch-22. So it is so important that we are in front of this. So most of my self-employed borrowers come to me. I think it's 2 years. There are programs that we only need 1 year of tax returns. That is true. But most need 2 years. So that means I need 2 years of full income, netted, and then averaged. So it's incredibly important that when you're local, I have the relationships with the accountants and the CPAs and the financial planners. So that way they can set themselves up for success when they're ready to buy. If you hear as an agent, I'm self-employed, there is not self-employed and retired, and I'm retiring. It is immediate. It is, you are doing them a disservice if you do not get them in touch with a local lender.
Right.
I mean, you have a fiduciary responsibility, right? And
100%.
And so many times we think about, oh, well, buyer's choice, and it is buyer's choice. But we also have a responsibility to know their unique situation so that they can be put in contact with the people that can make their dreams come true. And so again, that is another thing. And I do a lot of communication with CPAs in the area and financial planners to educate myself on the changes in taxes so that I can understand the tax returns, that when I review them and submit them into underwriting, I already know I'm ahead of it. Where I'll be honest, a lot of lenders are scared of tax returns. So they just throw it up and see if it sticks. Send it to the underwriter, see what the underwriter says. And, how many times do we hear, I'm self-employed and the underwriter said no? When your loan officer, me, or my team, when you have experience and you understand income and our area is unique and you deal with it, you know what to look for first so that you can create a package to give to the underwriter that's approvable.
Yeah.
You wasting people's times to include the underwriter, right? Because our job is to make sure we're sending them what they need and the cleanest file. And if we don't, then imagine the processing getting backed up, which means turn times get backed up, which means you're waiting on an answer for us. So it's super important to work with somebody that knows that piece so they can make sure that what they submit is just going through the system.